Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover a very fantastic video pertains to the latest action by Federal Reserve, which is the rate hike. So the topic of the video would be hawkish Fed implication on carry trades. As you very well understand that we have a lot of videos about the carry trades, and in fact from the long we are warning the carry traders that the Federal Reserve is going to hike an interest rate, and that did happen. And now Federal Reserve has clearly said they turned hawkish, and they said that they are going to increase this interest rate several times in 2017, provided, yes, they rightly said that it is going to be data driven, but at the same time this would have a deep implication on the carry trades in India. Now, before moving this video further, we should first understand what do you mean by carry trades. Although there are a lot of videos about carry trades you'll be able to see on our YouTube channel. Carry trade is a phenomena when somebody in his country or her country would like to move forward and would like to invest in somebody else's country, because the return he or she is getting in his or her country is very less versus the return somebody else is giving. So over the period, what happened, the carry will further divide it into two parts. One is known as investment carry and one is known as funding carry. Investment carry is a phenomena which is like Japanese yen. We very well understand here the interest rate in the Japanese are negative in nature. So what people they started borrowing from the Tokyo, and because conversion of dollar into Japanese yen, and invest this Japanese yen somebody else across the globe in the form of cross currency. So what people started did, they converted the dollar into Japanese yen, and from where they converted the Japanese yen into Indian rupee or Singapore dollar or Australian dollar, or could be your so-called Philippines peso. And then when the carry trade winded up, where the general period of the carry trade is roughly 6 months to 1 year, but in Indian context this is approximately 1 year, they are going to take the money out and they are going to further reconvert this in Japanese yen, and from Japanese yen they further convert into dollars, and they are going to pay this. There are some economists across the globe who continue to term this as a money market hedge. I never differ from that. This is a money market hedge. In fact, they are very right that this is an example of the money market hedge. But at the same time, and also they try to argue that the carry trade cannot be possible unless otherwise a particular country of the globe, they until and otherwise the particular country of the globe do not have the very depth fixed income market. I would surely agree with that. So moving forward, this is an investment carry, and over the period, lot of funding carry would happen. Sorry, the example which I given, this is a funding carry of Japanese yen. My apologies. And investment carry means like Australian dollar, your Indonesian rupiah, your Indian rupee, to an extent New Zealand dollar, Singapore dollar, Philippines peso, and others. I've always said that Singapore dollar and Philippines peso are slowly turning out to be an emerging carry, and this would surely be happen because Monetary Authority of Singapore is extremely serious when it comes to giving a status of the carry trade to their currency. While at the same time, Philippines peso is also trying very well, although they do not sound very good professional relationship with the US due to some statements, but nonetheless. So moving further about this carry, so these are the few important points we would like to highlight. We would like to highlight before you. So we understand that Federal Reserve rate hike open a debate in the foreign exchange world regarding the future of the carry, uh, where the future of the carry would go. I personally suggest that carry would continue in the near term. Carry won't die, although there are a lot of channels which keep discussing that carry would die. But my personal opinion suggests that the hike in the Federal Reserve by 25 basis point, which has taken the implied federal rate to 250 bips, and also at the same time which has hiked the yields in the USD standpoint, United States Treasury, will further lead to huge loss in the books of the banks when it comes to the M2M valuation for bonds. Of course, if you're holding a bond at 1.75% and suppose The bond value is sitting today is reaching at 2.57%, 2.57%, then of course this matters, and there is a loss to it. And I don't think that don't think that there are ample of American banks or the European banks, those who are holding the bonds as held in maturity, because as I understand that majority of the bonds are they happen as held for trading and available for sale. I myself served as a corporate treasurer, so I know that the kind of bonds they are holding. We should also appreciate the fact that the carry trade would continue, but also at the same time we should emphasize that the hike in the rate would put a lot of pressure on investment carry currencies like Australian dollar, Indian rupees, Singapore dollar, and Indonesian rupiah, and of course Philippines peso also. The rationale is very clear. I've taken an example of Indian rupee in that context. Reserve Bank of India is seriously follow a accommodative monetary policy, politically or non-politically in nature, but they've not been able to do so. They've not been able to do so now because Federal Reserve has hiked the rate, and they clearly said that they are going to be hike the rate at least 2 or 3 times in 2017, and at least which is data driven. If this would happen, then I don't think that RBI is in a position to cut the repo rate. Rather, they need to increase the repo rate. Now, RBI is in a big dilemma. If Reserve Bank of India will increase the repo rate, then interest rate would move up, because Indian transmission mechanism of monetary policy is designed in such a way that if you cut an interest rate, then it won't the impact won't reach at the bottom. However, if you increase the interest rate, then the more impact will come on the top. And you all, those who are watching the video, is clearly aware of the fact that Indian economy is facing the impact of demonetization also. So of course, agree or disagree, or politically or non-politically, the demonetization impact will shave off at least 3 to 4% of the GDP for next few years. Those who are thinking that Indian GDP would be able to maintain or would just get a little hit of 3 to 4% for only 2017, and probably by next few years this would be able to pick up, I don't think so. I think in the next several years Indian GDP would take a strong hit. But at the same time, this is my personal opinion. Another beautiful thing which has happened because of the carry, which is on euro. This week is also a very important week, and in fact, one action has already had happened, because this week three central banks, which is Bank of England, your Swiss National Bank, and Norges Bank, they are going to tell the people that what exactly they think about the monetary policy of their central banks. Now, euro is already trading at 1.04, and Bank of England has clearly said just today they said that they are not interested in hiking the rate. Rather, they want to continue with the same interest rate, which has taken GBP further down. So GBP is trading at roughly 1.38 something. You can frankly treat this as 1.24. I seriously don't think that ECB is in a decision to cut the interest rate, but at the same time, I also not in a situation that ECB can hike the rate also, because last week they clearly said that they wanted to continue with the quantitative easing program, although quantitative easing program, although with a less quantum, although with a less quantum. Now things are going to be a little difficult for ECB, to be very honest. In my personal opinion, things are not going to be easy for them, to be very honest. The another two bank, which is Swiss National Bank and Norges Bank. Norges Bank is always having an impact on the commodity market. We all know that NOK is always a commodity player, especially the fossil fuels like oil and others. As regards the Swiss National Bank is concerned, their president Thomas Jordan has clearly said number of times in variety of meetings that he is seriously not interested in increasing the interest rate. Rather, he is seriously interested in cutting the interest rate, provided that would create a show in the system. So I don't think that Swiss National Bank will did any hike now. Rather, I might not be surprised if they go with the status quo, to be very honest, but only the time will tell. Moving further, Singapore dollar and Indonesian rupee would continue to have their place as a carry, and in my personal opinion, they would soon get the status of the carry currency, and at least the first one, which is Singapore dollar. We cannot deny the relevance of Monetary Authority of Singapore. Monetary Authority of Singapore is again one of the powerful central bankers we have across the globe, and in my personal opinion, Singapore dollar would surely be a carry currency soon. In fact, it is a kind of carry. It is a kind of carry today. So I think the Monetary Authority of Singapore is doing a wonderful job, and Singapore dollar would be a carry. And of course, in the last few quarters, Singapore GDP has decreased on YOY and quarter-on-quarter basis, which is a little cause of concern. And property prices have fallen in Singapore, which is another cause of concern. So that is something which we need to see. But I think that over the period, Singapore dollar is a carry currency. As regards the Philippines peso is concerned, it is trading roughly 50 today, 49.98, which is roughly 50. And I think that this is an historical figure. In fact, I still remember my days when I served as a corporate treasurer for American companies. We used to pay premium, rather we used to receive premium in case of Indonesian rupee. And now what is happening that Indonesian rupee is not only offering premium but also trading at 50. This would surely lead to the big M2M losses in the books of the Indian corporates. And at the same time, I hope that they will learn the lesson of having an option contract in the books, rather than purely be focusing on forward contracts. As regards Indian rupee is concerned, we already discussed a little bit, but in a nutshell that RBI is in a dilemma, because one side they need to do accommodative monetary policy, and on the other hand, demonetization would have an impact on the Indian GDP. I think this is not this is a little bit dilemma before Reserve Bank of India, and I don't think this is very easy for Reserve Bank of India to resolve this dilemma, but they need to resolve this dilemma, because demonetization is now a practical stuff, and I think the impact of the demonetization would be longer. It's not I don't think it's a day or so impact. It of course takes some time. Surely it's going to take some time, to be very honest. And I think that there is no choice before Reserve Bank of India to have an accommodative monetary policy for a longer tenor. I don't think so. But yes, if they would like to continue, they need to continue. That is something which we can say. Moving further, this is a chart we would like to show you about the carry trades. Now, we already showed you that carry trades is of two kinds, which is investment carry and funding carry. Here we showed to you. Now, here Japanese yen would continue to act as a funding carry, and if euro would continue to stand at negative interest rate policy, which is NIRP's negative interest rate policy, and if euro will touch parity, which is surely be a condition, which is surely going to happen, if not now, at least in January when Federal Reserve will meet, and if not hike rate, then at least could be very hawkish. Then I think euro will head towards parity. Euro will not touch parity in the next 15 days because there is a clear rationale. Number one, from 15th of December to 30th December, it is always a cooling off period in the financial market because of the Christmas holidays. So very less action would happen in the financial market, to be very honest. And also at the same time, the liquidity is very, very fragile. So yes, at the same time, this is a dangerous position also. Dangerous position in the sense that if any wrong statement would come in the next 15 days, where the probability is very low, very, very low, then they are just gone. Euro is simply gone. Then I think euro might touch below parity, but I don't think so. The reason here is that I don't think that in my last 10 years of career as a corporate treasurer, I never saw that any major action hasn't happened from 15th of December till at least 5th or 6th of January by the time markets open. To be very honest, I think that markets will continue to move up, and my personal opinion suggests that that euro won't touch parity. It should be between 1.04 to, or it might bounce back to 1.05 as well by December 2016. Yes, the first peak which we seriously need to see again, Federal Reserve is going to meet and they need to take up a call. I don't think they hike, but I strongly think that they are going to be very, very hawkish, to be very honest. They're not going to hike, but they are going to be very, very hawkish, and that matters. That matters. And the very important point here, we need to see that how other central bankers behave, like Norges Bank, Bank of England, Bank of European Central Bank, Swiss National Bank, how they are going to behave. I don't think that they are going to be hawkish. They are going to be dovish. So one side Federal Reserve is going to be hawkish. One side these all set of central banks, G7 central bank, going to be dovish. So this is going to be a little difficult scene, in my personal opinion. This is what Federal Reserve, the main person to whom we are talking about here. I think collectively all we are heading towards dollar shortage. we are heading towards dollar winter or reverse carry. You see whatever term, because media use several terms. Like I always say reverse carry. On the other hand, media always say this is a dollar shortage or dollar winter. You are most welcome to use your own words. It's not a problem. But at the same time, I surely would like to tell you that something or other pertaining to the dollar strength is going to happen. And in fact, I hope you all are aware of the fact that after the Trump, the dollar index went to 102, and now it has reduced. After some time it was reduced to in fact close to 100.32, and after the rate hike, dollar is again bounced back and it is again 102.30. In my personal opinion, it is heading towards 103 and 104. Only the time will tell how it would be. Below this, we have mentioned a small chart. MA stands for Monetary Authority of Singapore, BOI stands for Bank of Indonesia, and RBI, of course, you understand, Reserve Bank of India. These three have a very important role to play, and of course, the fourth, which I missed, which is by mistake, which is Central Bank of Australia, my favorite. These four have a little key role to play. In my personal opinion, that this is of course a carry player. Central Bank of Australia, Reserve Bank of India is the carry player. All four are the carry. All the carry players. I strongly think that I strongly think that Reserve Bank of I strongly think that these four will decide the future. I'm sure that Reserve Bank of the Central Bank of Australia and Monetary Authority of Singapore would continue to hold their interest rate, rather decreasing it. I'm not pretty sure about Bank of Indonesia, and I don't think that Reserve Bank of India would be able to maintain repo rate at that level or status quo. I think they would cut that. But collectively, I have one statement which I wanted to give, that if these four central banks would move together in a near term, by near term I mean at least 1 year. 1 year I mean 2017. Then there is a prospect of carry. If they would diverge, like in technical analysis, we have a term called moving average convergence and divergence. If they diverge, then I think that the carry trade would wind up. I think that the carry trade would wind up, or if not wind up, then carry trade would be, I would say, carry trade would be centralized only to these two parts, which is Monetary Authority of Singapore and Central Bank of Australia. With this, we would like to thank you very much for your patience and time to hearing us. We would continue to upload a lot of videos, and our endeavor is to touch 500 videos by December 2017. We would continue to work upon. Of course, this will take some time. In case you like the video, please subscribe the channel, and if you like the video, please give a good feedback of the video on the channel. This will help us to grow. We, Treasury Consulting LLP, always ready to help you. We are everywhere across the globe. Like we have this Daily Motion, Dropbox, LinkedIn, Skype, SlideShare, Snapchat, WeChat, Telegram. We are everywhere. You just name us. And in fact, we are very happy to share that now we have our own online academy, which is TR Consulting, and our own online academy is conducting a lot of courses. And I hope by 2017 we would have a lot of organized way of conducting the courses. Of course, company is just a 9-month company, and a lot of activities which are going on. And my personal book is also coming in January 2017. So of course, everything going on. So certainly, few things take some time. But yes, 2017 we would have a lot of things organized, like videos and everything. In fact, we are very pleased to share that 2017 we would be more concentrating on technical videos, more technical videos about fixed income derivatives, equity linking of notes, credit link notes, and all. More concentration will be happening on such kind of videos. With this, I wish all the best to you, and you are always welcome to contact us here. My email ID is rahul.magan@treasuryconsulting.in. My alternate email ID is info@treasuryconsulting.in. Mobile number is known to most of the people, 9899242978, and my Skype ID is rahul2327. You're most welcome to visit our website www.treasuryconsulting.in. Thank you, and have a great luck.